Moving on, Capri Global Capital reported its Q2 numbers with net interest income growing 22% year-on-year and 1.2% quarter-on-quarter. Disbursements declined 2.8% QOQ, while AUM growth came in strong at 55.9% YOY and 10.4% QOQ. To discuss more on the numbers, we are now joined by Rajesh Sharma, MD at Capri Global Capital. First of all, thank you so much for joining us, Mr. Sharma. Wish you and the team a very happy Diwali. First up, when you're talking about the NII growth, it's lagged the AUM growth. How was the operational environment in the quarter gone by, and what is the guidance that you're giving for FY25?
Yes, first of all, wish you and everybody at CNBC very, very happy Diwali. So, on the back of launch of addition of new products and addition of the branches, I think we continue to show good, strong momentum in the growth side. As you said, we grown 28% quarter on quarter and year on about 55%. Besides that, there's an uptick in the profit margin as well, that our profit have gone to about 97 crore, which is up about 28% quarter on quarter. And this has happened because we have not only invested in technology, but also focusing on branch productivity. This quarter, we have also added the new product, the rooftop solar financing under MSME vertical. So I think that also we will see some growth coming in the coming quarters. Overall, this has been a satisfying quarter despite all the challenges on the cost front and everything else.
So when you say there was some challenge on the cost front, can you talk about the incremental cost of funds versus the average cost of funds that you saw? Even provisions declined massively. So what is the credit cost guidance that you have for FY25?
So we talk about credit cost is quite stable at about 1%. And I think we being on the all secured space, be it MSME, be it affordable housing, be it micro lab, which we started in a couple of quarters ago, all are secured portfolios. So we don't see much delinquency pressure there. So credit cost is going to remain stable. However, cost in terms of cost of funds, I think that is where we see that now interest rates are tightening and banks financing is for the sector itself becoming a little difficult. But we have a little advantage over here because we are only in secured space where in every loan there's a collateral, be it gold, be it housing or the business premises in the product specific. So I think there banks are still comfortable. But overall, as we all know, yes, there are little headwinds, but we see that as far as the on-ground growth is there, we clearly see that the second half is going to be better than the first half.
You did allude to the fact that the funding environment currently is slightly tight. How's the liquidity scenario for you? Are you able to source money easily at this point of time? Has it improved in Q3?
So the first half, we got the line close to about 4,500 crore, which is massive for us. And I think on the back of very robust performance in terms of asset quality and our banking relationship with the banks, they have seen our performance quarter on quarter. They are quite comfortable. So we are getting the bank credit lines adequately, and this is not going to hamper our growth. So we are adequately having the liquidity and credit line from the banking system.
While we spoke about how the NII growth lagged the AUM growth was really strong for you, 56% on a YY basis, 10.5% on a sequential basis. What is the momentum that you're expecting in the rest of the fiscal? What's the growth rate that you're looking at in FY25?
So, on a broader perspective, for the 2027, we are targeting a AUM size of 30,000 crore. And we are on that path. We have now achieved already 19,000 crore plus. So we expect that this year we should close about year-on-year basis about 30 to 35% growth, and all in secure portfolio space. And we see that we should be there by 27, about 30,000 AUM, which we have given the guidance in the past as well.
So AUM growth guidance is quite robust. Now let's talk about indirect retail lending. That's seen quite a bit of a sharp decline. Are you focused on bringing it down further? Is this a calibrated approach that you're following?
So earlier we used to fund the small NBFC and housing finance company, but now we are not lending them to much. So we have slowed down there. and focusing more on our own direct sourcing product. Since we added micro lab and now we added rooftop solar, so we have adequate product to focus on rather than giving money to smaller NBFC. So that is where we have seen this change in that trend.
Mr. Sharma, your disbursals have declined 3% on a sequential basis. It's largely coming from the MSME space, going by the numbers that I'm seeing. Is this something which could continue as a trend? Because you spoke about the solar rooftop, which you're going via the MSME way as well. What would the growth there look like? What happened this quarter?
So MSME will overall basis in a year will grow in the range of about 10 to 12%. But since now we added the rooftop solar and micro lab, next year onwards, MSME will come back with the growth about 20% kind of thing. So we will see that we'll adding more branches also in MSME, and MSME will also start contributing the overall growth. This year has been a little muted year because we have not added more branches, and we are more focusing on the housing finance and other side. But now in the last quarter of this year, we'll add few branches, and the next year full-fledged, we are targeting about 20% growth in even MSME as well.
Mr. Sharma, I want to squeeze in a last couple of questions. We are running short of time. Gold loans, construction finance, they've done very well for you. Gold loans, you saw quite a bit of growth, probably aided by the fact that IIFL Finance wasn't present in the quarter gone by. Can this momentum continue? And secondly, give us a guidance on spreads as well as the net interest margin going forward.
So spread is going to be maintained at about 7%. That is what we are targeting. As far as the gold loan is concerned, that growth was a little on a higher side because of the reason you stated. Going forward, we'll come back to the growth of normal growth in the gold loan. There will be not a excessive growth. The growth will be coming equally from our housing finance, gold loan, now new addition of the product, as I said, to product of rooftop and the micro lab, and MSME growing by 10%. So overall, we'll continue to grow about 30% plus on a year-on-year basis.
All right, we take that point. Mr. Sharma, thank you so much for joining in today with your take on what the outlook is going forward. So sounding bullish, that's the word coming in from the Capri Global Management. But with that, we're completely out of time on trading hour, but stay